Hey folks, my name is Ross, and today we're going to talk about the new stimulus package, that $2 trillion bill that just came out in March of 2020. And specifically, what we're going to talk about is the people who kind of fall through the cracks and aren't going to be eligible for the $1,200 because of income restrictions, and small business owners, how you can actually end up with quite a bit more than the typical person if you play your cards right, assuming that you can get the SBA loan that they're offering that would be eventually forgivable, which would be huge. What you'll see is it actually has a creative name here, the Coronavirus Aid, Relief, and Economic Security Act, CARES Act. Really, actually, one of the smart things the government's actually done, they gave it a nice name, CARES, right? So I've read this, and I'm going to try to save you some time. It was 800 plus pages, and it reads like stereo instructions, so you're not going to have a lot of fun. So what I'm going to try to do is I'm going to try to point out some of the highlights and really talk about the reasons as to kind of what may prevent you from getting the $1,200 and what you can do about it in the SBA world. So if we just start at the table of contents, the way it's structured, what you're going to see is that they have, it all kind of kicks off with the Title II section. This is for businesses, specifically small businesses, and we'll dig into that in a little bit. Before we get there, I want to tackle the issue as to why certain people aren't going to get the $1,200 that really the media is focused on. So if you're a small business person, you may find out that you're not going to get that $1,200, but don't worry. In a little bit, we're going to dig into how you can actually end up with more. So if we skip down to subtitle B, rebates and other individual provisions, you're going to see how some of you may not be getting the $1,200 check. You're going to get a credit against your taxes imposed by the government. So clearly you need to file taxes to get started. But my wife actually brought this up. She's just like, yay, so we're going to get $1,200. And I'm like, no, we're not. And as this bill's developing, she's like, yay, we're going to get $1,200 plus $500 for our kids plus $1,200 for each other. No, we're not. Why? Well, let's dig into that. So for us, in our particular situation, our income is going to be for a joint return more than $150,000. So if you're a small business owner, you might find yourself in the situation where for your family, if you're over $150,000, you're basically not going to get that $1,200 check. If you're a single person, $75,000 towards $100,000, you're not going to get that check for as an individual. But don't fret. If we go back to the beginning, let's talk about what happens for the businesses. All right, so the way that the bill is structured, when we're talking about what it means to small business people, you're really going to start at the beginning. So it's going to be the keeping workers paid and employed incentive. So what they're trying to do is they're trying to encourage you not to fire your employees. But if you're a small shop, let's say like you're an accountant, or I don't know, like I'm an appraiser, so it's just me. Just think small business. Maybe you're like an optometrist that only has a couple of employees. You're going to kind of fit into this category. But what they're trying to do is they're trying to give you a loan. We'll get into the amounts of those loans from the SBA 7A program, and with that loan, what you're going to be able to do is pay your payroll and pay your mortgage on your building if you own it, or you rent on your facility. And then what they want you to do is not fire people. So they don't want people to slide into the unemployment section. They want people to be employed, but yet they're going to kind of give you some loans to keep that afloat. And the theory is if you're not firing people, that they're going to actually make that a forgivable loan, which is a nice term for free money. So keep that in mind. Okay, so what you'll see is they start with the terms on who's eligible and what they're trying to do here. And you'll see it starts from February 15th. It goes all the way to June 30th. An eligible recipient is going to be an individual or an entity that is eligible to receive a loan. So if you're an entity, think about it. If you're an S corporation, a C corporation, an LLC, this is going to be you, right? Also, they stuck in, I think, for self-employed individuals, So, you're talking Uber drivers and people in the gig economy have a chance at going this route as well. Some people actually are going to fit into a category where their income is going to be low enough to qualify for the $1,200, and at the same time, they might be able to take out an additional SBA loan, make their payroll or keep their payroll up, and actually make more money this way. So for you Uber guys out here, I want you to really pay attention to this section because I think you're going to be able to double dip. I think you're going to be able to get the $1,200 plus $500 for your kids. And I think you're going to be able to get forgivable loans from the SBA. So there's probably going to be a pretty big line at the banks once people figure this out. So hopefully you get there first, or at least hopefully I get there before you, and then you can stand 6 feet behind me. That's my plan. Okay, so what you're going to see is they basically have how you'll go ahead and get your payroll cost calculated, okay? So the way this works is you're going to take the sum of all your payments for any compensation to your employees, so that's salary, wages, commission, payments of tips, things like that, vacation, paid sick leave, all that stuff, payment for group healthcare, retirement benefits, and you're going to, they just added this one, the sum of payments of any compensation to or income of a sole proprietor or independent contractor that is a wage, commission, income, net earnings from self-employment or similar compensation that is not more than $100,000 in a year. So that's probably how you get paid if you're like an Uber driver or a Lyft driver. You're probably getting paid under $100,000 a year, and you're probably getting it as a 1099 and at the end of the year. Your employer probably sends that to you, so you're going to be eligible as well. So you don't have to have a corporation, you don't have to have an LLC, you're going to have a chance here. This is the big one though. Your salary has to be under $100,000 to qualify. For the salary for the people that are going to be in this category have to be under $100,000, and you have to live in the United States, which makes sense. They want you to pay taxes. If they don't want to give out money to people who don't pay taxes in America to begin with, so keep that in mind. Another key provision: you have to have less than 500 employees. I'm not really too focused on that. I'm talking about the mom and pop shops, the small places like my business. That's really where I've kind of spent my energy on figuring out whether or not this will work for me and for my family. And just so you know, just as a side note, my business has been completely decimated by this because I'm an appraiser. I appraise businesses, and about 80% of my clients are dentists. And I'm not sure if you know this, but the ADA, the American Dental Association, has basically shut down dentistry for the last few weeks to conserve medical supplies, to keep their dentists healthy. If you think about it, these people are in the faces of people who may or may not have been sick. So dentists have basically been shut down for most of this month. And if you think about a person like me, I help people buy and sell dental practices, and guess what? Nobody's buying or selling right now. So I have been more or less decimated from this, and the government was actually looking out for small businesses, and I'm going to fit into this category. And for many of you who don't fit into that $1,200 of kind of free money, here's your chance. Okay, sorry for the side note here, but under 500 employees is the key here. Then they start talking about the provisions you're going to need to document for the bank. Later, I'm actually going to apply to try to get a loan, and I'll fill you in on how that process works or how it worked for me. But my assumption is they're going to want tax returns, they're going to want my W-2s, they're going to want any kind of payroll information I have for my company to be eligible. And I think I probably have to demonstrate a little bit of financial hardship that has come along with the COVID thing, and that's not going to be hard for me to do. They can look at my bank records and figure out, oh, he doesn't have any clients anymore. Here's how they determine the amount that you can take. So the maximum loan amount. So during the covered period, with respect to a covered loan, the maximum loan amount shall be the lesser of And it's the sum of the product obtained by multiplying, which is a really fun way of saying you're going to multiply after you sum up a couple of things that they're going to ask you to do. So the first thing you do is you start with the average total monthly payments for payroll costs incurred in the year before the date of the loan. So we're looking at 2019 specifically. So if you gave yourself W-2 wages, if you gave your employees W-2 wages, if you had independent contractors at 1099s, or if you yourself were taking in 1099s, then this is going to fit for you. So what you're going to do is you're going to look at your average monthly payroll for that time for your whole business. That's going to be the first number that you're going to use. So I'm talking about a person that would make more than enough for the $1,200, but less than the $100,000. So let's pick $90,000, okay? So if this person made $90,000 per year, that's $7,500 per month, okay? Then what we do is we would go ahead and you can add in other things that are going to be in here. And it doesn't get into that yet. Okay, so the average total monthly payments for payroll costs, and then you multiply it by 2.5, okay? So in this case, it's $18,750 for this person. So at $90,000 in income, I mean, if you're a business owner, you probably have some more income, so you're probably not going to qualify for the $1,200. But if your full income was $90,000, you would get a small portion of that $1,200. It'd probably be like $300-400. But so in that case, you'd still get a little bit of that $1,200 everyone talks about. But now you're talking about $18,750, and that would be a loan. So that's not too exciting. Who really wants a loan? But we're going to talk about how it does get exciting in a little bit. You can get that loan. The most this would be is for $10 million. So if you imagine you've got a lot of employees that are under $100,000, you can get to $10 million at some point. But that again would require you, and we'll get into the provisions here. It's going to require you to keep those people on the payroll during this crisis. So it's, in a way, it's going to be a gamble for the larger businesses. For the small businesses, it's a no-brainer. You're going to want to take this loan. So in addition to this loan, you can also use the loan for other things, not just payroll. You can do it for health insurance if you want to keep paying that, commissions, interest on any kind of mortgage on, say, your building, rent if you've got a facility you need to rent, utilities, and then any other debt that you had before you kind of started into this agreement, which is kind of nice. It's going to help you cover some of those loans, but 2.5 months times 2.5 times your salaries might not be enough to cover those, but it's a help. It's at least pointing in the right direction. This is a nice little section. So non-recourse. So the administrator, the bank, this SBA, right, that's giving you the SBA loan, she'll have no recourse against the individual shareholder, member, or party of the eligible recipient of a covered loan for non-payment of a covered loan, except to the extent that the shareholder, member, or partner uses the covered loan for proceeds for purposes not authorized. So if you're not paying payroll, if you're going out and buying a new truck or something, you're probably in trouble. So don't get into that. Like, just think about it as payroll, making sure the business is up and running still. This part's kind of cool. Section H here, the fee waiver. So during the period, it says they're not going to take any fees on this. So a no fee loan, pretty nice. It does talk, there will be interest, and I believe it's capped at 4%. Let me just see if I can figure out where that is. No collateral would be required, which is nice. No personal guarantee, which is really nice. Okay, interest rate requirements, here it is. Section L here. A covered loan shall bear an interest rate not to exceed 4%. So that's nice. Hopefully it's lower than that. Interest rates that my clients have been getting have been in around 3% range for regular business loans a month ago. So they might be able to beat this 4%, but I have a feeling 4% will be the standard interest rate you're going to be getting on these loans. So there's a deferral section, and I believe it says that you have a 6-month deferral. Here it is, okay. It's going to require lenders under this subsection to provide complete payment deferment relief for impacted borrowers with covered loans for a period of not less than 6 months, including payment of principal, interest, and fees, and not more than a year. So somewhere between 6 months and a year, you're going to have to start paying this back. They can sell your loan, good for them. I don't know who would want to buy these loans, but okay. Banks are pretty much given free authority to give this out. So if you read into this, you'll say risk weight. It has a weight of 0%, meaning the government is handing this money out like candy to small businesses. So it shouldn't be hard to get one, assuming that the bank is there and answering the phone and you can actually get an appointment with someone and you can deliver the documents to them. So it sounds like from the way they wrote it, it should be easy to access this if you are a small business. This section, the reimbursement, that's from the bank's perspective. So how do they get money back from the government? Not really worried about that because we're not bankers here. There are provisions in here for, there's no prepayment penalty, which is going to be nice. Let's talk about the definitions for what is a covered small business concern. It means that how does this impact you, right? So do you have supply chain disruptions? Is there any kind of change in the lead time? Does it take a long time for products to get to you so that you can assemble them and make something? Have you had any quality issues? You're not getting the same level of product that you used to get. Are you having problems with technology? Are you having staffing challenges? Your staff can't come into work, or they're not working. Even if they're working remotely, it's not really suitable for them. Here's a simple one: a decrease in gross receipts or customers. Like, that's got to be the easiest thing to prove to the SBA. Hey, look, I don't have any clients. I need this. Closure. Let's see. Really big on this Women's Business Center. There's a lot of information around that, which I skipped through because it doesn't really pertain to me. But you might want to dig into that a little bit more if that is your category. No matching funds requiring. Matching funds shall not be required. That part's nice. Alright, so here's the important part here. You go all the way down to section 1106, loan forgiveness, okay? So here's what we're going to talk about. You have the covered loan, which is the loan that you're talking about, the SBA. It's going to be this section 7A. It talks about the date, that there's a certain time that you're required to keep your payroll in place. Let's see. You're only allowed, these are the things you're allowed to use your money for. So you're allowed to use it for payroll, you're allowed to use it for rent or mortgage, you're allowed to use it for utilities, gas, water, transportation, phone, all that fun stuff. And then payroll, of course, payment of interest for your mortgage, payment of rent, payment of utilities. Okay, forgiveness. An eligible recipient shall be eligible for forgiveness of indebtedness on a covered loan in an amount equal to the sum of the following costs incurred and payments made during the covered period: payroll costs, interest, rent, utilities, okay? Treatment of the amounts forgiven. In general, amounts which have been forgiven under this section shall be considered canceled indebtedness by the lender authority under section 7A of the Small Business Act, okay? What does that say? We're going to forgive it, meaning free money, okay? Purchase of the guarantees, that's what a bank does, remittance, okay. Not later than 90 days after the date in which the amount of forgiveness under this section is determined, the administrator shall remit to the lender an amount equal to the amount of forgiveness plus any interest incurred through the date of payment. Okay, limits on the amount of forgiveness. The amount may not exceed the principal. That's logical. I'm okay with that. Reduction based on the reduction in the number of employees. So this is the key one. If it's just you, obviously you're not going to fire yourself and you're not going to want to trim your payroll. But if you've got a lot of employees, you have to pay attention to this section. So the amount of loan forgiveness under this section shall be reduced by multiplying the amount described in subsection B. They're like lawyers that write this, so obviously you can't figure out what that means. By the quotient obtained by dividing. Okay, what they're saying is you're going to take a ratio of what you used to pay in your payroll to what you're currently paying in the payroll if we fast forward 3 or 4 months. And if it's something like 50%, like you're only paying 50% of the payroll you used to pay because you had to let some people go, well, you're only going to get forgiveness of half of this loan. There might be some games you can play with the timing, but I would just think about it this way. Try not to reduce your payroll as much as you can. Try to keep it where it was because that will maximize the amount of forgiveness that you're going to get. It does talk about how you can bring back people, but the main thing that they're still trying to stress is don't fire anybody. We don't want them on unemployment. We'd rather have you paying for them. So this is kind of their way of getting around that and jacking up our unemployment statistics. All right, so how do you get the forgiveness portion? You're gonna have to apply for that. So after this is all over, an eligible recipient, which is you, you're looking for loan forgiveness. You have to submit to the lender that is servicing your loan documentation verifying the number of full-time equivalent payroll people on the payroll and the payrolls during that time period. So payroll tax filings reported to the IRS. So if you're a small business, you're going to file quarterly payroll reports to the government when you pay your payroll taxes. That I think it's Form 941. You're going to have to hand that back to your lender to verify that you're still keeping people paid at the same rate that you had in the past, which would be pretty easy if you're a small shop. Canceled checks to the people you're paying, or your utility payments, your mortgage, your rent, things like that. That's going to be the documentation they're going to be looking for, making sure you didn't spend all your money on a brand new truck or boat or something. You have to tell them that you used it for the things that you requested it for. The amount of forgiveness is requested was used to retain employees, make interest payments. So, basically saying that you're using the money for what they gave it to you, for the purpose that they gave it to you for. All right, here we go. Taxability. This was what I referred to earlier. So, for purpose of the IRS, any amount which would be includable in gross income of the eligible recipient by reason of forgiveness described shall be excluded from gross income. Oh, that's kind of cool. That's a shock. When I read through this the first time, I didn't catch this. So, any amount which would be included in gross income of the eligible recipient by reason of forgiveness shall be excluded from gross income. So the way I'm reading it now is if you took out a loan and then they forgave that loan because you met the obligations and you were playing by the rules, you weren't firing anybody, they're not going to count that as gross income, which would make it tax-free. And then this part, appropriations, just talks about where they're going to get the money from. Well, the government's just going to print it. That part's easy, so I don't care about that. The government has free money. They have their own printing press. There's sections about minority business owners. There's section for female owners, all that kind of stuff. You can dig into it. You'll love reading it. I'm not going to read it for you, but I think what we really covered is the gist of it. What we're looking at is if you are a small business or you're a gig economy person. So think if you've got a W-2, but it's a check that you write to yourself because you're a really small business, like a S corporation, sole proprietor. Sole proprietor, you wouldn't get a W-2, but the small mom and pop type practices, businesses, this is the section you want to look into. You want to look into getting a SBA 7A loan. and if you do, it's going to be forgivable. So in some cases, you may be able to double dip, you may be eligible for the $1,200, and then you may be able to get an SBA loan, which would eventually become forgivable. So some of the people out there may, if you're willing to jump through the hoops, may actually come out of this okay. So with that, I'm going to go. It's a Sunday, so I can't do anything as far as actually figuring out whether or not I can get a loan. But on Monday, I'm going to go ahead and I'm going to go through the process of trying to get a loan. And I will update this to let you know whether or not I was successful and see if I've got any pointers on how you can also get one of these loans. All right, well, stay safe, wash your hands, all that fun stuff.